You ever get that feeling that things just don't quite add up? I mean, you look at the world and geopolitically things feel so fragile. Domestically, there's all this turmoil. And yet you look at the stock market and it's throwing this massive party like none of that is even happening. How can both of those things be true at the same time? Well, that's the paradox we're going to unpack.
And I'm not just talking about a feeling, it's real. Despite all the uncertainty swirling around, U.S. stock markets are just surging. They're hitting these dizzying new heights. It really feels like fear has just completely left the building and it's been replaced by this wave of pure euphoria.
I mean, just look at the numbers. They're historic. The S&P 500 just closed above 7,000 for the first time ever, and the tech-heavy Nasdaq also smashing a new record. The big picture here is just a red-hot market. No two ways about it.
So this brings us right back to that core question. You've got a ceasefire that everyone's calling fragile. You've got major political uncertainty brewing in Washington. So how do you explain this level of optimism? Why is the market partying like it's 1999 when it feels like we're standing on some pretty shaky ground?
Okay, so let's try to figure this out. We need to look at the three main arguments people are using to justify this rally. Is it really about peace? Is it about strong company profits? Or is it something else entirely, like rising prices just feeding on themselves?
All right, so the simplest, most common explanation you'll hear is what traders are calling the peace trade. The market is basically betting big, I mean really big, that the conflict in the Persian Gulf is, well, pretty much over, and that all those worst-case scenarios are officially off the table.
And look, this optimism isn't just wishful thinking. There's some actual data that seems to back it up. For one, the ceasefire is holding. We're seeing some really strong earnings reports from big banks. And this is a big one. More than half of companies are actually raising their financial forecasts for the future. That's the most positive we've seen that trend since way back in 2021. But here's the counterargument. Some analysts like Steve Sosnick over at Interactive Brokers, they think this isn't really about fundamentals at all. He basically says it's a momentum rally. In other words, prices are going up simply because prices are going up. The trend, the price action itself, has become the only reason that matters anymore.
And this brings us to the really interesting part, the cracks beneath the surface. Because if it is just a momentum rally, well, that could explain why the market seems to be ignoring some incredibly serious risks.
Just look at what the market seems to be shrugging off. On the geopolitical side, that ceasefire is fragile, and the global energy supply is staring down a massive stress test. And then at home, you've got this huge uncertainty at the central bank, with the president threatening to fire the Fed chairman just a month before his term is up. It's a lot.
And hey, it's not just us saying this. You have market veterans like the managers at Osterweiss who've been doing this for over 30 years, calling this combination of risks unprecedented. So, while the market's throwing a party, some of the most experienced people in the room are starting to get really, really nervous.
Now, if you want to see this disconnect in action, we've got to look at a specific example. Let's talk about the wild speculation happening right now in the world of artificial intelligence. It perfectly captures this mood of mania. Okay, so consider this company, Allbirds. You probably know them. They were this Silicon Valley darling for a while, famous for their comfy wool shoes. But lately, the business just completely collapsed. They were facing total oblivion, selling off their main assets for just a tiny fraction of what they were once worth. The company was basically toast.
And then this happened. Out of nowhere, their stocks suddenly rocketed up an unbelievable 582%. So you have to ask yourself, how does a nearly dead shoe company do that?
Well, they said the magic words. The company announced it was ditching shoes to become an AI-native cloud solutions provider. That's it. Just by using the right buzzwords, a company on the absolute brink of death was suddenly worth hundreds of millions more. It's an absolutely brilliant, almost hilarious illustration of the speculative fever we're seeing right now.
So if the market is behaving this irrationally, how are we supposed to make any sense of it? Well, luckily, there's a classic framework from the legendary investor Benjamin Graham that can help us understand all this madness.
So Graham created this parable about a character he called Mr. Market. I want you to imagine he's your business partner, but he's emotionally unstable, a total manic depressive. Some days he's on top of the world, totally euphoric, and he offers to buy your shares for a crazy high price. Then, the very next day, he's in a complete panic and desperately offers to sell you his share for almost nothing. He's driven entirely by emotion, not logic.
And here is Graham's genius lesson. You don't have to play his game. You hold all the power.
You can either take advantage of his wild mood swings, selling when he's euphoric and buying when he's panicked, or you can just ignore him on the days he's being completely irrational.
This modern quote from finance professor Meyer Statman just puts a perfect button on it. Your job isn't to figure out why the market is crazy. You're not supposed to try and fix it. Your job is simply to protect yourself from its craziness, and if you feel like it, maybe even profit from it.
And that really leaves us with a final thought. If investing is a game, who would you rather have sitting on the other side of the table? Would you rather play against a perfectly rational, logical opponent, like Mr. Spock, who never ever makes a mistake? Or the emotional, irrational, and, let's be honest, often foolish Mr. Market? When you see it that way, a crazy market might not be a threat at all. It might just be the greatest opportunity an investor could ever ask for.